welcome back to Tax Talk with Compass. My name is Brittany Drish, and joining me here today is our senior accountant, Mike Piper.
Welcome back to the channel, everyone. Let's kick things off.
Yeah, so today we're going to be talking about a topic that's very close to a lot of people's hearts, which is charitable giving. More specifically, we're going to be talking about how the One Big Beautiful Bill, otherwise known as OB3, which was passed into law this past July, how that's going to affect any of your charitable giving. So if you are planning on giving to charity, this video is for you.
Yes, and I'd just like to point out that there's no major impact on your individual 2025 taxes, but there are some important changes coming next year that you should definitely know about.
Yeah, so Mike, would you kind of mind getting into what those changes will look like for 2026?
Yes, definitely, Brittany. There are two key changes that are starting next year. First, if you take the standard deduction, you'll get a little bonus. There's a brand new above-the-line deduction for charitable giving. That'll be up to $1,000 for single filers and $2,000 for couples married filing jointly. This is designed to give non-itemizers a way to deduct some of their donations. There are some rules. The donations must be made in cash to qualified public charities, and they can't be to donor-advised funds or no private foundations. But the second key change starting next year we'd like to discuss is for those who do itemize on Schedule A. There will now be a 0.5% AGI floor. That means your charitable contributions must exceed that 0.5% of your adjusted gross income before you can deduct anything. It's a small change, but it could impact how much you can deduct.
Okay, so for anyone that is planning on itemizing on their return, that would just mean that they would need to donate a little bit more in order to receive that tax benefit then, right? Okay.
Yes, exactly. Think of it like your medical expense rule when itemizing, where you need to pass a certain threshold before deductions kick in. But from a tax perspective, bunching donations in the 1 year might make sense if you're looking to itemize.
Okay. Since we are on the topic of itemized deductions and Schedule A, are there any changes in 2026 for the highest income earners?
Sure is, Brittany. Beginning in 2026, there's what's called the 237th rule. It's a new cap on the overall value of itemized deductions for those who are in that 37% federal tax bracket, limiting the tax benefit on itemized deductions to 35 cents instead of that 37 cents. So if you're a donor in that bracket, you may want to accelerate giving in 2025 to lock in that higher deduction before these changes take effect.
Good to know. As far as documenting any donations, has anything changed with that?
Short answer, no. The documentation rules are the same. For donations under $250, keep a bank record or receipt. When you give $250 or more, the IRS requires written proof from the charity. And for non-cash gifts over $500, you'll need an additional form of your return that has additional information on it. So record keeping is still key to make sure your deductions stick.
Okay. Well, the good news is your charitable giving still remains an incredible way to make a huge impact. And now with these new tax laws, it also helps us be able to strategically plan in order for them to also benefit you.
Yes, and if you're unsure how these rules could affect your situation, or maybe you need some planning on your charitable giving, contact us here at Compass Tax Advisors. We're here to help and make sure your generosity works for you.
Absolutely. Thank you so much for your insight, Mike, and thank you all for watching. We'll see you next time on Tax Talk with Compass.